And we are live here. The market is bouncing back just a little bit. We got a lot left in the day after yesterday's precipitous sell-off. We've got Matt, we've got Cody, we've got Tim here. It's Tackle Trading's halftime report. Let's get right down to business. Matt, first off, how you doing this morning?
Tim, doing very, very well. Excited to be here with the crew to talk about the markets today.
I just realized I caught myself. Let's get down to business. No pleasantries first. But now let's get down to business. Let's run through the stock markets real quick here, Matt. S&P, NASDAQ, Dow, and the Russell. Give me a look at the S&P to start with, if you will.
Yeah, let's break down the S&P chart here very quickly, just to kind of get everybody updated on kind of what's been transpiring over the last 24 hours or so. When we last left off yesterday, we were right here sitting in the marketplace looking at that 2860, 2850 handle. You see that little line I drew in the line of support yesterday. And I said, if we break down, we should see a continuation. And that's kind of what we saw here, Tim. And, I thought maybe 2800 was in line, maybe on Tuesday, maybe on Wednesday. But I mean, I remember talking to you after the market, and all of a sudden, boom, we just drive down underneath that 28 handle. And then the international markets kind of take over and transpire. The cash open kind of occurs right here. And you've really seen nothing since the cash open here, Tim. In fact, really what the overnight did is it really just came back into that same little breakdown we had over here. And now you're sitting just kind of in a fade action right now. It could really kind of go either way at this point from here throughout the end of the trading day. And kind of where I'm looking at, Tim, like I said yesterday, bearish breakdowns are going to be in play here, and bullish retracements are going to be in play here. And that's really kind of what we're seeing in the market set up today is, and maybe we'll get into it here in just a little bit, but, a play like, say, a Chipotle, right? So a CMG here, bullish retracement coming down into the rising 20-day moving average. Perhaps not a trigger here, maybe a little early on the setup, but you're seeing that bullish retracement really kind of take right there. A stock that was on the stock report here today, this one kind of drove down into a support level. We talked about Yeah, bro, baby. We talked about updating that trigger yesterday. Hammer candle coming in off support with the volatility drop coming in on Monday. Upward moving in price closing, not closing, but broke up above the high of yesterday. If you look at this from an intraday perspective, high of yesterday kind of broke up above those levels. Maybe it hasn't triggered yet, but that looks like a good old trade. And then on the downside, especially in the energy space, you're seeing a lot of weakness in energy stocks. Schlumberger here is one to really kind of take a look at over the course and put it on a watch list, in my opinion. Look at what's happened to Schlumberger over the course of the last year. And now you're coming into a major support level right here at about 35 with a low tick there in the 34.50 range. You drop this down into a weekly chart or go into a weekly chart, you see what we see is a little bit of a cup and handle formation with the cup handle, and it looks like it might have a breakdown, and that breakdown would be severe in my estimation on Schlumberger. The trade I was looking to take to give me a little bearish delta today was Halliburton here, and I got Halliburton breaking down out of a significant whole number with a momentum type trade under $20. So, bullish retracements and bearish breakdowns is kind of what my focus in when the market does this, and we're seeing it play out.
You got to kind of take the pitches that the market gives you. And right now, those are the patterns that are building, no doubt about it. Module 3 of the step system, bullish retracement. Module 6 of the step system, bearish breakdown. Just a reminder, everybody out there, if you're a pro member, you have to completely finish that course if you're going to join the mastermind group. And we're going to have more announcement on that later in the month, and we'll be talking about it as well.
I had an email from a student who put her first trade on just the other day, right? And her first trade, she is fresh off the boat, Tim, like literally part of Legacy and Tackle for like the last 2 weeks. And she put her first trade on, and guess what? It triggered in one day, went down to the first target, okay? And in a step system, we have two different types of targets. And when it hit the first target, she emailed, she goes, what do I do in my first target? What do I do in my first target? And I said, you go review Module 6, Session 2, and you make a choice. That's what you do.
That's right. That's exactly right. That's why I love that step system so much, Matt. It's, as an educator, it is so nice to have the confidence to be able to say, hey, just go watch this, right? We'll be here live for you to help you apply it and understand it, and we'll answer your questions. But here's this great content that you can go and learn how to adjust your stop losses, how to place them, where to put them, and exactly where it is.
And I think we created that step system so that we could just do that when we get a million different emails.
I got to tell you, I mean, that is
Yeah.
a sneaky little secret about life.
Sneaky little secret.
Yeah, I mean, you create great stuff so that you can have the value that basically is exponential. It's like compounding your gains, and in education, there's no doubt about it. A lot of things I want to talk about here today. By the way, if you're out there watching us right now in the chat, just type in where you are. I always get curious about where our audience is out there in the world, Matt. State, city.
And while you do, give us a nice little like and share. Let's get those Fibonacci retracement numbers up there quite a bit.
There's no doubt about it. We got 57 people in here live in the first few
minutes. And we got Jimbo, 52% completed. I love it.
I like it, Jimbo. Tech is bouncing back today. It had the biggest sell-off. So when the market bounces, that does make sense, Matt. Give me the NASDAQ, if you will. And let's take a peek at this one. Good, strong green candle off the 200 period average, Matt. Last night, I felt old. I felt young and I felt old and I felt a lot of different things. But one of the reasons I felt old is yesterday didn't even affect me for like 2 minutes. I'm like, well, whatever happens tomorrow, my accounts are ready. I know what I'm doing. I've been doing this forever. And I had no emotion about the sell-off in the market. I was talking to you and you had said, hey, Tim, what do you think is going to happen? The market's
Speak a little closer into your mic, bro.
Is it not up there, right there?
Yeah.
I said, let me check the outbound while I talk. Break that NASDAQ down. I'll check my audio for you.
Yeah, looking at the NASDAQ here, and really kind of similar to the S&P 500 on the daily charts, both of them kissed right on that 200-day moving average, and that has certainly played a role in the S&P and the NASDAQ. As you can see, a little kiss-off hammer candle, pivot candle type formation. You got your bounce, you got your pivot, you got your confirmation, you got your bounce, you got your pivot, you got your confirmation, you got your bounce, you don't have your pivot, you don't have your confirmation yet, but you are seeing a little bit of those similar signs coming into that 200-day moving average, and it certainly has acted as a support level. I mean, when you're looking at kind of the breakdown here, Tim, from a news perspective, you don't have a lot of good news out there right now. There's not a lot of economics coming out last night, and I'd like to get you and Cody's opinion on this, because after the market closed last night, Treasury Secretary Mnuchin labeled China a currency manipulator. And that's not a good thing from an economics perspective, okay? So I do want to get your take on it, but the news is bad, but that's because, and why the market's really kind of up is it's fighting for that 200-day moving average. That 200-day moving average right there at about 27.91 on the S&P. But when you look at it here on the NASDAQ, Tim, it literally dinged on the tick almost right there at about 72.21, and then you just saw an explosion coming in on the overnight. And much like the S&P 500, after the market cash open here, you just really have not seen a lot of really kind of appreciation. You would love to see some follow through on the market here with that overnight, but it just has not transpired. I think the NASDAQ and the market is in a very, very important moment on the intraday. Look at this intraday resistance level right here at about 74.50. Support, and it is just playing defense at that 74.50 level. I wouldn't touch the index until we start seeing breakouts and get back above the 200-day moving average on this time frame. But to me, if you break down under 74.50, you could come down to 7,400 in a stone throw.
Oh, no, that's why I say, and I was talking earlier, let me know if you can hear me better, Matt.
Yeah,
Cody,
I hear you great.
How's your audio? All right. What I was saying last night is nothing was going to surprise me today. That's why I felt old. Like market could be up 2%. It could have been down another 3%. Nothing would have shocked me one way or the other. And I was ready for it. I mean, that's trading 101. Here we are at the cash open. I think both the S&P and the NASDAQ, you nailed it here. They've done nothing. They're not following through on this intraday bounce. It doesn't mean they won't or that they can't. What it means is that market participants don't know where to go here, and they're going to wait for price action to confirm that.
This is kind of what I felt on the overnight, that with the market rebounding on the overnight, what was it on the S&P 500? Let's come back to here. With the market rebounding, oh man, it was 2780 to the open. I mean, we're talking about 70 points back up, Tim, on the S&P 500 here. And then I kind of felt like if the market was going to rebound, there wasn't going to be very much follow through. If the market was going to gap down, I felt there was going to be a big buy the dip type situation. And market responded on the overnights, and there really hasn't been any follow through, and I think that's concerning.
I agree 100%.
What's your take on China label and not the U.S. label in China currency manipulation.
Correct me if I'm wrong, but that hasn't happened in like 25 years, right?
99.
Yeah.
Since 99.
It's 20. I mean, that's almost, what is that, 19 years? I'm trying to do
19 years.
20 years. So I think it's significant. I mean, it's political posturing in some regards, but by the way, it is true. They do manipulate the currency markets, and so do we. So
my thought was literally like,
yeah.
Wait, is this news? I thought we knew this.
I didn't know that was a big thing to designate that, by the way. I've been trading for 14 years. I didn't know that was a thing.
It's a big thing because because now the United Nations, World Bank, IMF, might investigate it, right? And what they're going to find is every country in the world does this. I mean, it's just like everybody manipulates their currency. Think about, and by the way, the U.S. started this in 2009. So we can sit there and yell at China all the time, but China's actually gotten rid of a lot of their currency over the last 5-6 years. So when you're looking at that label, it's just a label. It's more political and more trade war rhetoric than more than kind of anything. But at the end of the day, everybody manipulates their currency. I mean, the U.S. manipulates their currency as much as anybody else. Here's my hot take here. If we're going to put on tariffs on China to really kind of pressure them to come to the negotiating table in a capacity that we want, well, that's going to harm their economy. It's actually going to harm our economy as well. What's China going to do to help them export more goods to offset economic damage that the U.S. is doing by putting on tariffs on China? And so the Chinese is going to lower the value of the Chinese yuan so that they can stimulate their economy because they're a net exporter. And quite frankly, we in the U.S. we'll point at the big red scare and be like, China, 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 when it's like, if I'm President Xi Jinping, I'm doing the same damn thing.
Yeah, I thought it was more rhetoric. I didn't even know it was a big deal to actually officially label it. It's going to be interesting. Like now that you mentioned the UN and the IMF, I'm like, in my head, I'm thinking, well, what kind of international bodies are going to want to get control or even get their hand into this? That might not.
I don't think anybody wants to get it. That's like getting in between two prize-winning boxers go at it in the backyard. Let them fight it out. Let them fight it out.
Don't jump into the cage with the U.S. and China right now. There's no doubt about it. So we are rebounding. Yesterday was officially, statistically, the worst day for the market in 2019. Now, that is notable, in my opinion.
It is.
I don't think that we are coming off of nothing here. And this bounce doesn't mean that we're clear sailing ahead. There's no doubt about it, Matt. In fact, I'd be very, very surprised if you don't see some other red candles here in the next week or so. If you just had a snapback, straight up rally, that would be a little more surprising to me than any other outcome. Expect some churn back and forth as traders try to figure this thing out.
Well, it's going to be a stock picker's market. And quite frankly, Tim, outside of this price movement right here, it's been a stock picker's market this year. This entire year, outside of these 2 months in March and April, was the stock picker's market. This market was really easy off that bounce right here on the 200-day with the V-shaped recovery coming out of what the Fed did in January and February. But outside of that, it has been a stock picker's market. And as a trader, that's how we want it.
Heat map is really interesting to me. You know, sector strength one place and the other. We'll talk about oil here in a minute, but the XLE, we're seeing some weakness across energy. And we did talk about how some sectors got downgraded. Energy actually went into the negative, Matt. And I'm seeing some red up there on the top corner. I know some of the bearish plays that you and I are interested are in the energy space. What do you attribute that to?
There's a lot of news coming out of Venezuela right now. There's a lot of news coming out of, I believe, the UK. Britain just agreed to kind of police the straits in near Iran so that, you know, shipping containers and whatnot can get through safely. There's just a lot of news out there right now in the energy space. And the energy space is just, there's a lot of negative just tone around the entire energy space. We've been talking about that with crude, and, you know, energy in the tackle trading newsletter has been the worst performing sector for how many weeks straight? I mean, it's been at least 6 weeks.
Yeah.
And then when you're looking at the heat map today, and this is kind of, you know, what I was seeing today, and this is what kind of led me to say, okay, I want to go take some shorts there. You're seeing a lot of momentum. And when you see, Oxy down 5% and Schlumberger down, 3.3%, Halliburton down 3.45%, those are really big red candles, and that means you have a lot of momentum going into the sell-off. And you take Halliburton and Schlumberger. I'll take a quick peek at Oxy as well, but they're also sitting right on major support levels. And if those major support levels are broken, well, it's look out below for both those companies and probably that space as well. Energy itself is I believe we had it as a -30 on the scoreboard. But I want to talk about the heat map very quickly. I want to get your take on it, Tim. We look at heat maps every day, right? Just for people who are fairly new to heat maps, what kind of information are you trying to find on the heat map to help you generate ideas?
I'm looking for obvious differences. I'm looking for information that might be split because of a thing called sector rotation. We know, as traders and investors, people who've been around the business, not everything moves at the same time. In fact, money has as a magnet towards where returns will be. If the market's going to be bullish and the market's going to go up, most likely investors are going to want to buy tech. They're going to want to buy consumer companies and service companies and industrial companies and even healthcare companies. We call them aggressive areas of the market: energy, materials, those types. So if like yesterday, if everything's red, but down in the very bottom right corner, you see some green in utilities, that just logically makes sense, right? So I know that utilities are a safe haven play. So I'm looking for if there's a sector movement, like the areas.
Okay, let me ask you a question then. Does it logically make sense on a day when the market's up about 0.75% for oil and gas to be down 3% and independent gas to be down 2.5%?
Well, just because oil is decoupled in one regard, where you've got news out of Iran and Venezuela, and crude itself, I've been somewhat slightly bearish on. It doesn't make sense for it to be down that much. So it grabs my attention, and that prompts me to dig further into it and maybe even scan my watch list for bearish candidates that are oil and energy dependent. See, I'm not going to go out and try to find everything new right at this point. The heat map is just to let my eyes see the market.
Well, absolutely. It's to see the market from 64,000 feet in the air, right? And and you obviously fixate when you're looking at this heat map here. I mean, excuse me. Yesterday's heat map was just blood red, right? There's really nothing to gain by looking at that heat map because everything did the same thing. But in this heat map, you're looking at it, and obviously your eyes go up to basic materials there, and you start wondering, okay, why are all these stocks breaking support? What is this? This isn't an individual stock issue. This is a sector issue when the entire sector like take independent oil and gas here today. Every stock in independent oil and gas today is down. Every single one. There is not one stock in this industry that is up today, despite the market being up today. That's an industry issue. That's a sector issue, not a broad market issue. And that leads to certain ideas. And you might want to go look at certain charts and generate other trading ideas as well. And what else I look at heat map is for the outliers here, Tim.
Yeah, Mylan.
Right? The outliers. So, you got ZTS up 6% today, and you got, Mylan down 7.16 today. That's probably earnings related. I would assume that would be earnings related. But I also look at, okay, so you got green. Well, look at these drugs right here. McKesson down 6.8%, ABC down 5.6%, CAH down 5.9%. So in the services aspect of the market, doing okay today. Well, drugs wholesale getting absolutely beat up. That might generate some ideas because there's something going on there. Maybe I don't know exactly what that is, but that generates an idea for us to go look at something from a trading perspective. On the flip side, some of these greens that stand out generate some idea. MasterCard up 2%. Fidelity, right now, Fidelity up 3.18%. So coming to FIS here, looking at just generating ideas here. FIS kissed off the 50-day moving average close to the old resistance at 124, upward movements in price. Maybe you reclaim 132, and that's a tradable opportunity. Heat maps are a wonderful way to understand the dynamic of the different sectors and industries in the marketplace also generating ideas.
Go back to the heat map for just 1 second. There's always one other thing that I do look at on a heat map, and it just will kind of trigger some emotion for me. I always look for into the industrial goods, and I look for the company that's second down on the left, right underneath MMM, and just see if it's down that day. If it's down that day, I know I'm going to have a good day.
I'm not going to give it to you. I'm not even going to point it out. I'm not even going to. What is Tim talking about? Let's see if the crew can identify what stock Tim is talking about that gives him just a happy feeling when he just looks at the heat map and he's just like, as long as that company is red, it doesn't matter what anything else does. I could lose money, make money, as long as that company's losing money, I'm good to go. I'll bet you some got it. I got it in a heartbeat.
But yeah, I got it half listening over here.
Yeah. You weren't here when they had their earnings report.
There it is.
I did actually give GE a little bit of credit. I was impressed with the way the CEO laid out some of the plan and what they did in the last quarter. So, but c'est la vie. Moving on. Stocks are bouncing back here today, Matt. Dow, S&P, NASDAQ, Russell. There's individual ones we'll talk about later. Let's go on to the commodities, though. Give me crude oil, gold, the dollar, and Bitcoin. Let's run through those one at a time. Let's talk crude here.
Same thing.
I mean, the energy sector is down big, but it's not down as much. So it's stock specific there. Just fading bearish, I would say. Would you put this 0 or -1?
Because of the short-term pivot relations and because you got a lower low technically in the short-term trend. Like if you're just looking at the short-term trend, that's what it is. Okay. And when you're talking trend analysis, Tim, on a short-term trend, when it looks like this, it gets hectic and crazy. And one of the difficult things for new traders is they don't know how to identify what trend to look at, right? Because they look at this pivot and this pivot and this pivot and this pivot, and it's just overall craziness, right? Well, you got to look at your pivot relations. And when you have a pivot here, pivot there, pivot here, and a pivot here, that is your short-term trend right there. And that is a lower low, lower high, lower low with a low base forming in that short-term trend. From the overall intermediate trend, I would give the intermediate trend a flat out neutral rating, right? Yeah. But in the short-term trend, I would give it a -1.
We rarely do it, but look at Brent oil, BZ. There is a difference in the chart now for one of the very first times that I remember in a long time. It's actually breaking below or near support, Matt. A violation here has a lot more downside.
Yeah, that's ugly. That's very ugly. Try to recover, hit the 200-day, inverted head and shoulder formation. Here's your, let me get a different drawing tool. When you're looking at inverted head and shoulders, there's your neckline, and look what happened here. Broke the neckline on volume, and it just got beat up, and now you're breaking the previous pivot right there at about 59.75. Brent doesn't decouple from crude very much, Tim, and I don't look at Brent every day the same way I do crude. In fact, this is the first time I've looked at Brent in the last 4 days. That is nasty. Why is Brent decoupling from crude?
I don't have an answer to that. I'm going to have to ask Mark and kind of talk to the team about it, because they usually trade in line down near support. If Brent breaks down, crude is still above its support zone, so that is significant.
What will happen in that, Tim, is either one, crude's going to go with Brent, or Brent's going to come back with crude, and we just don't know yet.
Yeah,
they don't trade 1-to-1, right? And Fortino basically. Crude is West Texas oil, right? That's West Texas oil. And then you have Brent, which is traded out of London, which is all Middle Eastern oil, Russian oil, all that oil. Brent is heavier than light sweet, and so light sweet crude is easy to combust into gasoline products and plastic products, a little cheaper than Brent. So Brent's always going to be like 10% higher than crude. And so when you see the decoupling, it usually comes back into correlation status, but it isn't right now. We got to wait to see kind of how that works. And kind of my take is here, Tim, when you're looking at Brent breaking that support level and you're looking at crude holding its low base, most likely crude goes down.
Broom, Rannick, Etive, Ness, and Tarbert is where Brent oil came from. It was the naming policy of the UK Exploration and Production.
That was quick Google work for you.
Yes, it was. I Wikipedia'd that right up.
Yeah,
I had actually looked that up before, but I couldn't remember what it was. Moving on to natural gas real quick here, Matt. We talked about that one maybe near a bottom. It's actually got a little green candle today. Long ways off from trying to bottom fish on this thing, but yeah, I mean, it's got a little pivot down there trying to develop. Maybe over time we'll get back into cash flow mode on that. Gold is up again. Just a hair, 0.4%, but it is notable in many, many regards because it's been up now for most of the year, quite frankly. What's your read on gold, Matt?
Love it.
Gotta love it.
Love everything about it.
Yep.
Okay, I'm turning into a gold bug.
How can you not?
Without the tinfoil hat. I'm a gold bug in the sense that I can't stand the Fed. So yeah, maybe that does put the tinfoil hat on. Okay, it puts the tinfoil hat on.
Yeah, little bit.
And now that I mentioned the Fed, Yellen, Big Ben Bernanke, Alan Greenspan, and Volcker, the cutthroat Volcker, the only one that I actually think is good, they argued for Fed independence in a Wall Street Journal op-ed yesterday. What's your take on Fed independence? I thought they had independence.
I saw the article. I didn't see the news conference. They're supposed to have independence, but they don't, and we know it.
Whatever. Come on. They don't because they capitulate and they're cowards. And so former Fed chair people go out there and write an op-ed. Well, why don't you stand up to political pressure like Volcker did in the 80s?
Dude, I saw Paul.
Volcker didn't give a shit in the 80s. Volcker was raising from 8% to 18% to cut out inflation of the 1970s.
But if Reagan told Paul Volcker what to do, Paul Volcker would have done it.
You don't think Reagan yelled at Paul Volcker 90 million times?
I'm pretty sure he had him on speed dial. If they even had back then.
Like this is not a Trump issue. Every president in the history of mankind since the Fed was created probably yells at the Fed to lower rates on absolutely everything.
Listen, I understand the argument of independence. I do, but oversight is absolutely mandatory, and we should be able to audit the Fed's balance sheet. I am completely 100%. Of those lines of thinking. I have 100%. Been for years. It's fine. I actually do appreciate the fact that they can set interest rate policy outside of the cycles of political elections, right? They should have an independent voice. Now, there's a lot more that goes into it than that, but I found
my family shouldn't control the dollar.
News conference with Janet Yellen and Ben Bernanke.
Oh, it was a joke.
I found it to be a little bit off-putting. Yeah, I didn't like it. I had to turn it off.
I didn't like any aspect of it. Every president's been crying for lowering interest rates for decades and decades and decades. The Fed was created as an independent arm to control monetary policy with the dual mandate of maximizing employment by lowering interest rates. And as you do that, you increase the risk to inflation, which means as you maximize employment to 3 to 4%, which we are currently right here, then you raise interest rates to offset inflation and cause market corrections. That's the Fed's dual mandate. And Cody, start talking so they can see the book.
Hey, crew, this is a book that if you guys want to learn all about the Fed, read this book. The Creature from Jekyll Island.
It's a great book. And not to disagree with the comment on Obama, but yes, Obama did. Obama launched massive, massive stimulus programs. And yes, he was the president and watched the Fed as the Fed went into $4.5 trillion in quantitative easing. And if you don't think President Obama was just absolutely golf clapping the Fed every second they announced further quantitative easing, you are kidding yourself. Yeah, Obama was the president. Hold on, Cody. Obama was the president who oversaw the worst monetary crisis this nation has and will ever see.
Yeah. Yeah, there's a lot there.
Tim doesn't want to talk that.
We could unpack that for 2 hours. I'm gonna punt on that.
That was leaving rates that low for that long was one of the most irresponsible things.
You can't just say it's a Bush and a Trump thing and say Obama didn't do it when Obama had zero interest rate.
Everyone does it.
Yeah. Modern monetary theory is not dependent on right or left politics. I can promise you that. They have moved this way for a long time for a lot of different reasons. And what Steve says, it's a great question. Should we dismantle the Fed? I think that'd be dangerous. I do. I would rather just have oversight and some actual kind of accountability to what the Fed is and
from
who they are.
1787 to 1913, the United States was so anti-central bank that if you even mentioned it, you got shot.
Well, yeah, they also had duels. I mean, Alexander Hamilton walked out into a court.
Why do you think Hamilton died?
That's right. It's true. All right, give me the dollar real quick here. Pullback. You boys are my Forex boys, and I do not touch this one yet. That's my personal take on what I've done with my trading. But is that a pullback that you guys are getting interested in? Some cross pairs that you're liking?
I am getting interested in the pullback, but the deep volatile pullback has caused currency charts to kind of go out of whack here. So but yes, Tim, to answer your question, yes, I am getting interested, and I'm not going to go into the cross currencies here, just going to look at kind of the major currencies here. But when you're looking at the euro dollar cross pair, that volatile backup in price kind of blew up that bearish retracement. So I'm not looking at the euro here.
Hey, look at it intraday real quick.
Yeah.
Because I will say that it does look very nice intraday, the euro dollar.
Well, from a day trader, I'll do anything, right? So from a day trading perspective,
the textbook head and shoulders retracement.
Yeah, a little bit. Yeah, you could be shorting the euro underneath 111.90 here. Little head and shoulders reversal short under there. Yeah, I could see that as a day trade. As a swing trade, looking at kind of the other cross pairs very quickly, Swiss franc sitting on a support level, very, very major support level for the dollar. So I do expect the dollar to appreciate, but that's picking up pennies at the bottom here. That's a tough trade to make. US dollar CAD pair coming into the 200-day moving average, maybe a break back up above 133, little momentum trade right there. British pound is the one I'm really kind of fixated on, and Cody's been all over this British pound over the last 3 weeks, forming a little bit of a low base with a potential break of 121 here. So I am looking at those. The Australian dollar just, down a little bit too far against the dollar right now. So I do expect the Australian dollar to kind of retrace, and that would form a good little bearish retracement. Japanese yen needs to retrace back into 107, but not on a daily basis. Give me a 2-3 day price movement. So it's going to take some time to let that dollar index really kind of shape up, Tim. But there's going to be some good trades on it in the next 2 to 3 days. And it really kind of starts with me on the British pound. I'm very bearish on the British pound.
Move on to Bitcoin here, holding. The old idea that it was a safe haven, that's just silly, crazy. We blew that out of the water yesterday. But I got to tell you, I'm impressed with the defense the last couple of months. After that huge parabolic run, I thought Bitcoin could have absolutely come all the way back down when it started putting those red candles in. Still could do it, Matt. We're up at a top point. Any read on the chart on Bitcoin?
No, there's no trade here from a swing trade perspective. I mean, like I said, I've said this how many times, I see Bitcoin as a holder philosophy or a day trading vehicle, and that's about it.
Some stocks I want to run through before we get into rapid fire here in just a minute, Matt. Take-Two Interactive had a big move to the upside. They raised their full year guidance. They had their earnings coming out. Down yesterday with the market. Earnings blasted it back up. I think a bull watch list is appropriate.
We haven't talked about this, but hearts, prayers, thoughts, all of that jazz go out to the people of Texas and the people of Ohio. Just absolutely sad. And that's kind of what kind of led to this price movement coming down. You had a lot of gaming type blaming going on there. So Take-Two had its coming back to the analysis here though, but Take-Two had its earnings report, and I have not read its earnings report. This isn't a company I follow as closely as say an Activision or an Electronic Arts, but out of your 3 major gaming companies, Take-Two, Activision, EA here, earnings per share was down. But what'd you say? Their full guidance? Raised
their guidance, said that they got good numbers, expect it. Yeah, definitely bullish. Yeah. Amazon.
Well, and it is breakout here too, Tim.
Breakout of a pivot. Yeah.
As long as you stay above 125 on Take-Two, you should have some appreciation coming into 130 and then ultimately most likely into 135.
No, I think it's on a bullish watch list for sure. Amazon, Jeff Bezos came out and said that he's selling about $2.8 billion worth of stock, but people, you got to remember he has $110 billion worth. So
yeah, that's he's selling a 2% stake.
He's not doing it to raise cash to go on vacation. He's doing it to raise cash to fund his whatever that is.
It's Blue Horizon.
Is it Bitcoin? He's going to buy Bitcoin.
My ears are ringing. Is somebody talking about Bitcoin?
I see Gino has his Cold-Blooded Market Assassin t-shirt on.
Oh yeah, we got it on, buddy.
There you go, buddy. There you go.
Oh, it says assassins. I thought it said Cold-Blooded Market a-holes. Oh, okay. Oh, that's
well, that too. I mean, you could go either way on that one.
All right.
Depending on what firm you work for, but yeah. So But anyways,
So true.
Tim, let's get into rapid fire here, buddy.
Real quick, I will tell a story real quick. We were down at the Black Eyed Pea when I was in Denver, Colorado. It's like a Southern comfort kind of soul type food type place. And we all had our Cold-Blooded Market Assassins t-shirts on, me and Marie and Sylvia and Jeff. And the waitress just could not figure it out. Like, are you guys assassins? Like, what's going on here?
Market assassins.
Like, do I need to be afraid of this crew here? And no,
not good timing with the assassin thing.
It was a conversation starter. Yeah. All right. S&P 500 right here, Matt. We are going to get into rapid fire. While people put in their symbols in rapid fire in the chat, I do want to just acknowledge one story I also got from one of my students, Matt. Ben Tran. Ben is a halftime crew member, and I won't get into the details. Basically, he sent me an email yesterday, and here's a reminder to everybody out there, okay? Learn how to buy insurance. Ben basically said, I had hedged my portfolio. I had done it correctly. I'd been beta waiting. I was doing all the training. And Ben went through mentorship with me, Matt. So I know he's had some more specific one-on-one training. And he had those put options, Gino, and it helped him offset some of the risk he had from the market dropping. If you're an investor, learn how to hedge, learn how to.
But you know what it is? You don't know what absolutely amazing to me there, though. When people think about insurance, Tim, they hope to lose money on their insurance every day of their life.
Exactly.
Mm-hmm.
Every single day of their life, they hope to lose money on their insurance. But when something bad happens, they are very happy that they have it, right? You don't hope that you exercise your life insurance. You don't hope that you exercise your car insurance. You don't hope that you exercise your health insurance. You don't hope that you exercise hurricane or earthquake insurance. But when you have it, you are glad, you are very happy you had it when something bad happens. Yeah. And it does amaze me that in the financial world, when people learn about insurance and they buy insurance to protect their portfolio, and in 2 days their insurance is down, but their account is up, they're like, oh my God, I'm losing money on my insurance. I got to get rid of my insurance. And they treat it like a trade. Like literally they treat it like a trade when they should be treating it like insurance.
Yeah.
And then when something bad happens, because guys, when these bad things happen, for a lot of people who are protecting 401ks and IRAs, they're not in front of the market to buy insurance the very second they need it. But like Ben Tran, they're very happy they have it when the market tanks 5, 6, 7% in a week.
Yeah,
that's
I
the purpose of insurance.
Spreads yesterday, I'll tell you. It's probably my best return on investment.
Osvaldo, real quick, Gino, and then I'll let you go. Osvaldo, we have a system at Tackle Trading called the Bear Market Survival Guide, and you can go out there and be a part of that system that teaches you all the things about trading bearish conditions, including buying insurance. And we also do a mastermind group at Tackle Trading every single month on the Bear Market Survival Guide for that team.
Yep. 100%.
Yeah, great. I don't know anybody that has a system like that.
No.
So yeah, Matt, I did some put spreads the week before, just as routine. I take a certain percent of my account and I do put spreads in the S&P or SPY. I mean, you could literally do a 1 point spread for a penny on the SPY. That's $1. You're right. The commissions are more. But anyway, I loaded up on, it's like a week out SPX put spreads for $5. And that's my go-to because that's the cheapest as you get them. So, you know, how cheap can I get insurance? They're out of the money. They're out of the money by a couple hundred points. They're, you know, put spreads in the S&P. Then I did
for everyone that's interested, I dropped a link in the chat and in the comment section for that survival guide.
I did it 15 days out, 21 days out. I did them every expiration for a month. So I wake up Monday, right?
Yeah.
And for every $5 I invested, I could have cashed out of some of them over $200 because they're a 5 point spread. And I'll tell you, I left some of them out there because the bear market's not over. And I'm like, I slept in. I had these put spreads on, woke up. I did, like you said, Matt, should I let them expire? Should I cash some in? So here's the thing. Buy some insurance, but over-insure yourself. This is one of the only vehicles in the world where
our insurance makes money.
Sure. You can't buy double insurance policies on your car and use them both. You can't buy double life insurance. Well, I guess you can actually.
It's called the ratio spread. That's what it's called, right?
Yeah. Well,
where you basically buying more put options than you own on the actual instrument.
Right. There's nothing wrong with that. If they're only $5 for a put, you know, and so here's the deal. Since I had so many of them, it was not hard to decide, do I sell some? Of course, I have too many. So I cashed in on some and I was like, nice. So when I cashed in on one, Matt, one of them paid for the next 3-4 months.
Yeah. Well, and here's the thing. If you buy insurance, like if you buy hurricane insurance one day before a hurricane hits, the premium's going to be massive.
Oh,
right?
yeah.
And if you wait for the market to go down 5, 6, 7%, the premiums explode, and it just costs so much to insure your position.
Yeah. And I mean, this is the kind of stuff that traders
I could do this.
all the
I
time.
could talk about this literally for 4 straight hours, because how people handle insurance in the financial world is utterly ridiculous. Sometimes they treat it like a day trade, and that's just a mistake.
Well, and a quick promotion for our podcast, Matt, because that reminds me of a question I asked Tyler. How do we get the word out on the very simple thing about financial education? Because everybody on this call, most of our halftime crew, most of our team tackle, they all know that insurance exists in the stock market. There's most of the public in this planet that does not even know that basic
99.99%, Tim. I was teaching for Legacy in New York just this last weekend, and one of the first questions I asked, and there was about 40 people in the room, I said, hey, by raise of hands, how many of you know you can buy insurance in the financial world? And everybody's looking at me like deer in headlights, right? It's like, what do you mean? I'm like, yeah, go call your financial advisor and see what it is. That's not how it works.
That's right.
But put options one of the reasons put options exist is for insurance. So let's get into rapid fire.
Let's do it. We got a bunch here. Gino, you staying with us? We're going to go old.
Yes, Gino's staying.
Gino is our veteran. He is the godfather in making, I guess. Godfather.
Keith is the godfather. I gave Keith the nickname. Gino's the Theta King. I gave him that nickname.
Is Gino Fredo then? If Keith's the godfather,
Gino's not Fredo. You can't call Gino Fredo.
Oh, all right.
I'll take God.
Oh, you're gonna own that sometime soon.
All right, AMD. Let's roll. Eric Organa. Always good to see your name, my friend
AMD,
from north
Gino,
of the border.
you're up, buddy.
Gino, you got this one.
Was it AMD?
Mm-hmm.
Yep.
Good. I was just looking at that because it's the first thing in my portfolio because it starts with an A. But yeah, we are getting a dead cat bounce right now. We got resistance up at 29.20, possibly 29.5. And I'm taking advantage of the volatility and rolling my in the money calls because of this. And I'm rolling them up 50 cents. So there you go.
USO, by the way, I got a naked put on AMD. I'm willing to take ownership deep down in the below it.
You're boomerang trading that though.
Yeah.
What strikes?
Oh, don't tell him. When did you put the trade on, T?
I put it on after earnings, 2 days after, and I was just looking.
Right
it was maybe that next day, but right in there before it dropped. I'm down on these.
I'm selling you sold to 26.
25.
You
200
can't go below 24.
No, 25 is what I sold. Yep. That was it. 200 period moving average. I'm willing to take ownership. I've been wanting some AMD for so long. Boomerang style in your portfolio where you're a longer term investor. It shouldn't be emotional. Sell if you're willing to take ownership. It's that simple.
Ken, did you pick the 25 because the 200-day moving average is there?
And I can't remember the credit, but it was just enough to where I felt like I could actually sell it and cover the commissions and still justify
Just
it.
as a curiosity, Tim, when I asked that is because I know you can't go below 24 because there's no strikes below there. But also, a lot of people that sell puts that take ownership, here's a little hint. They love to do it on a major 50 or a 200-day moving average because that's if it's going to bounce, it'll bounce there.
That's right.
We love selling out
terrible
support.
rapid fire, by the way.
Yeah, I was thinking the same thing.
Facebook, let's roll.
I believe that's me.
The least rapid in rapid fire is Mark.
Okay,
so
stop.
All right.
Stop. Okay, stop. You don't need to take a shot at Mark when he's not here to defend himself. All right, that's number one. Number two, here's how you do rapid fires. Facebook gap down at 180. 180 is an old support level. There's no trade here. The trend is broken. It's in between moving averages. We got a crunch on the moving averages. I'm not going to give you the tickle. And so there's no trade to see here. Focus on 180. A close under 180 certainly could see 170 fairly soon.
Snap. Next. Love the retracement here. I think you need confirmation. A trigger review module.
I took the trade.
Yep.
I took the trade. Cheap risk here. Cheap risk here.
BLL, Cody.
Let's see. BLL is up and looks like we need it to either retrace or form a high base before you do anything. It's already up and moved.
ExxonMobil, Gino.
I like a trigger above 75 there, though. That's a good one.
Okay, maybe unmute myself. ExxonMobil is in the energy sector and oil's testing supports. I'm bearish. Look for the retracement swing high.
Yep.
Freeport, McMoran, Able. Matt, you're going to take this one.
FCX?
Mm-hmm.
Freeport McMoran. Freeport's more copper, right?
Yeah.
Yeah, they're not gold. They're more copper. So Freeport here, obviously, when you're looking at GDX here, the gold miners, the silver miners, when you're looking at gold, silver, all of them are doing absolutely fantastic. Copper is not doing fantastic. You are sitting at a long-term support level, though, between $9.60 and $10. I could certainly see investors picking up FCX at that $10 mark. It's a significant hold number, long-term support level, with the intention of doing covered calls on it because it is a good covered call stock.
Apple Computer. I skipped this one so that I could get it on my turnaround here, Matt. Question from Scott. Can Tim talk about the butterfly on Apple? It was an inverted fly, Scott. I actually you would have more profit on it today than I did, but I actually took profit on the gap out because I sold it for 70. It was a 5-point fly, Matt. I don't know if you remember in the halftime report, we kind of prepped this about a week ago, and I sold it for 70, bought them back for 40. So it was a quick one-day hitter for me on the earnings.
When we play inverted butterflies, we're talking 1 to 2 days. We're in that trade too.
Yep, Scott. So that's kind of how I approached that one. It's now way down. I'm sure you're close to max profit if you were on that one continued.
Yeah, if you stayed in it. I mean, if you gave up that next day, Tim, you're looking at a loss.
Yep.
That's tough to hold through that.
Yeah, so the management there would have dictated whether you had a small profit, no profit, or a big profit, actually. It would all come down to management, which is a lot of trading, by the way. CERN, I'm going to give this one to Cody.
Let's see. CERN is breaking down. Let me get it on my chart so I can see it a little bit better. All right. I'm seeing a head and shoulders pattern. It looks like it's starting to break the neckline. If it continues to break below 70, I think you can trade it the downside as a reversal.
2 more minutes on rapid fire. We'll get through. We can. Matt, I'm giving you 5 in a row. Baba,
nothing to see here, Tim. You got volatility galore and you have earnings coming up.
VXX, volatility ETF product.
Oh, yeah. Let's have me analyze volatility index.
Got it.
So stupid. I'm done with that one.
VXX. What's wrong with VXX?
I'll trade volatility, but I hate all volatility.
Naked calls. Now's perfect timing.
Okay.
Out
Hold on. Let me say one thing.
Rapid fire, Matt.
If anybody here sells a naked call here or a naked put, you're asking to get punched in the face by Mike Tyson back when he was Iron Mike. All right. That's number one.
Like Mike Tyson's punch out.
Your car payment.
I'm talking Mike Tyson punch out on the final round type scenario.
I'm trying to remember the combo you had to have to be able to beat Tyson and punch out. It's been a long time. That was a fun game. Berkby, Matt. Berkshire had earnings, actually. Berk/B.
Berk's been in the news.
It takes a truly deep skill set to do rapid fire when Gino's in your ear.
100%.
I'm just trying to give you money.
I love it, Gino. I love it.
Make you money.
Berkby.
Berk/B.
I know, I do /B.
Berkby.
Berkby here sitting at a long-term support level, post earnings gap down and ran into support. But Tim, you got support. Berkshire at 197.5, major support level. You're looking to bottom feed here in that neutrality. A breakdown of that should see 190, but nothing besides 190. Very safe.
There are worse ideas than leap covered calls on Berkby at long-term multi-year support, by the way.
Yeah.
That grabs my attention. We've got to figure out what they're doing with Kraft Heinz, but c'est la vie. Spotify and Matt will take it.
Spotify here. Looking at a little bit of neutrality, maybe a flag pattern. If you can get a good read here on Spotify, that's better than mine because I don't have any read outside of a potential breakout of 156.40.
And give me 5 quick ones. We're going to roll through these. ASB from Ilka. Dividend coming up a couple weeks, breaking below support, but you've run into it. Just have to depend on trading plan. Caterpillar. Always going to be sensitive to the trade war and everything that's happening. You see the big precipitous sell-off. You're down near support on a dividend payer post earnings, though. So there's some interesting mixed technicals there. Short-term bearish, long-term neutral. Twitter. I like this company. I've liked what they've been doing. I've seen increasing and improving fundamentals now for about a year and a half, 2 years, Matt. And the chart is starting to come around. A little bit of a tough swing trader.
Good luck with that.
Yeah.
When you're looking at that, look at Snap here.
I think they're better.
Not even close. Snapchat is such a better technical setup than right now.
And if I missed one, I apologize. We'll be back here tomorrow, though. We're doing a free show here on YouTube and try to pump in as much value as we can. We'll also
get those likes up, ladies and gentlemen.
Laughs in. What do we got? What do we got going on at Tackle Trading this week, Matt? I know we released our podcast last night.
Podcast last night, had real fun on the podcast.
Yeah.
And then we have the coaches show tonight, coaches lounges. Do we have any special mastermind group tomorrow?
Ooh, I was going to ask Mark that during our meeting here in about 30 minutes.
We usually do have a mastermind group.
I'm sure we have something going on. It's probably the Tackle 25.
We're the worst promotional
Tackle
people
25.
of all time. There you go.
Tackle 25 cover call. First Wednesday of every month is usually Tackle 25. So that's what we got tomorrow night. Cashflow Club on Thursday. Gino, you doing any lounges this week? Are you going to be popping in?
I'll be on the lounge tomorrow. And I'm going to be on the lounge tomorrow. So 8 o'clock Pacific Standard Time. And let me see. I'm also going to be on there Friday.
Gino, I got a request for tomorrow then. Could you spend a few minutes talking about those cheap nickel spreads that you look for?
Yeah, that would be a great topic, actually.
Yeah, that would be really cool. I mean, guys, if you're out there and you're a pro member, I think that would be
$5 spreads.
Really valuable lounge.
Well, let's just ask the question. How many of you guys want to see a lounge with Gino Port talking about how he insures his portfolio with cheap options?
And I've done it hundreds of times, showed it to the masses, Matt. I've shown the insurance strategies to the masses.
You actually showed the strategy, almost a year and a half back, and I've used it since then. And it's a great strategy. You guys.
Okay, now just so you said, thank you very much, Cody, because I was going to just say something about that is I love showing people, but what kills me is I'll sit there and literally, Matt, show people how they can buy the SPY put spread for $1. As they drink their $5 latte, they're looking at an SP put spread for $1, and then they're adding the commissions in there and going, well, it's actually $1.75. And then if I close it, it's another 75 cents.
I know they micromanage insurance. It's the dumbest stuff ever.
They'll dissect a $2 trade.
I know.
I want to expire worthless and I want to lose on, and they won't place
with their $6 macchiato and their $8 green juice.
Oh yeah, and their $500,000 trading account. And here's the thing.
I know, it's insane.
They won't place it. So when Cody says I actually placed it, that separates you, Cody, from the men and the boys right there.
Well, that's because Cody had an absolutely fantastic mentor.
I agree with that. And he's a Texan. He's a Texan. He's not afraid to take action.
Hell no, Texans aren't afraid to take action.
Beard. He's not afraid.
Guys, if you're watching our show for the first time, like, subscribe, click the bell so that you can come and join us each and every day here on the Halftime Report. And like Matt said, always give us that thumbs up. And if you can get the word out there, great. Matt, fantastic job today. Really enjoyed it. Gino, you ruined rapid fires, Gino. I don't know what to tell you.
It was
all right.
Utter destruction.
Calls, UBXY, pay your car off.
Yeah, utterly destruction of all things rapid fire, Gino. Could you imagine a Gino Port and Mark Justice rapid fire?
You mean one where we actually stopped?
What they get through? I'll set the over under at 2.5.
Oh gosh, that's it, guys.
It's all about strategy. What strategy am I doing on this thing you just called bearish? Which one?
See, he's still talking about the first stock he was looking at.
It's a naked put or naked call, right?
Dude, I am so fired up to hear about this tomorrow. I actually think it'll be a real big value. Right now, there's no better time to learn insurance. I know the market's bouncing back today.
Yeah, there is. Last week was a better time.
You only have the moment, my friend, and that's what it is. And we are done here today. We'll see everybody back here tomorrow.
Right on, man.